Thank you, Charles, and thank you to our good partners in Minas Associates for hosting this webinar. First, a few words also about us. So China Policy is a company tracking, mapping, and evaluating the policies, agencies, and the people shaping the PRC's domestic and global agenda and its implications for the world. We often say that small movements in China often ripple around the globe, and we believe that grasping how Beijing frames their strategy is crucial for anticipating not just what PRC is doing, but why. At the heart of our work is a team of around 20 analysts and an extensive database of historical legislation, policy text, and trend analysis across all economic sectors. This has been built over 2 decades and reveals patterns, assesses long-term trajectories, and offer critical intelligence to the market. And we partner with clients who see strategic value in understanding how Beijing sees and plans for its world. Today's topic is China's global dominance in green technology. Their rapid capacity buildup in green tech has turned heads. It now accounts for 2/3 of the world's renewable installed capacity under construction. It has half of the global fleet for electric vehicles. One new electric vehicle rolls off PRC production line every 2.5 seconds. It commands over 80% of global battery manufacturing capacity. And the list goes on. And this dominance runs to countless related sectors like primary chemicals, metals, and materials, you name it. It's safe to say the PRC is cementing its dominance over the entire clean energy supply chain. Nobody seems to be effectively challenging them. Attendees of recent COP summits must have noticed how they are now basically showrooms for PRC green tech. When it comes to capacity building, Beijing's strategies since the 1990s have paid off, but China has also accumulated capital and know-how. Here's what the numbers tells us. As of now, China accounts for up to 1/3 of global total investment, more than 1/5 of global R&D spending, with 80% of that being experimental research. And both figures now exceed China's 20% share of global labor force. The shift highlights how China's comparative advantage has evolved. It's no longer just about cheap labor and land. Instead, it's about scaling up and innovating at an unprecedented pace. And yet, China still accounts for only 13% of global consumption. So here's the question. Global capital is abundant, and the technologies we're talking about aren't that extraordinarily complex. Why then has no other nation been able or willing to mobilize resource on the scale anywhere close to what China is achieving? Well, that's something to reflect on as I go through this presentation. I don't necessarily have the answer to that. But we can talk about the sophistication of China's green tech products. It might be still true that many foreign and multinational corporations control certain critical technologies, and some often produce higher quality goods. But they often struggle to compete with China when it comes to price and speed of delivery. China's strength has been its ability to mobilize a large, now highly skilled workforce, leverage a vast domestic market, and operate incredibly efficient supply chains. And while export controls might slow China's access to cutting-edge technology, they also shield its domestic market, making it harder for competitors to gain ground in China. We often see foreign companies come with second-rate products to China and think that they will be successful, and they're often disappointed. The competition there is really, really fierce. And closing the current technology gap has long been a priority for China's leadership. Over the past 2 to 3 years, we've seen a seismic shift in the innovation sector, a transformation that is still unfolding. This is central to the story of modern China and something I'll come back to. It's not just a story of scaling up, but it's also a story of cost and prices coming down. Take a look at this chart from the International Energy Agency. Well, the orange line represents production cost in China, while the dots show the cost in other major countries. What's clear is that China has a significant cost and price advantage, typically starting at 20% lower and rising across every major segment of the clean energy supply chain. And this spans everything from raw materials and core industrial components to finished products. No surprise then, PRC has rapidly cemented its position as the leading global supplier of these products. Here's another chart showing the rapid rise in both the value and volume of Chinese exports. So most focus has been on what Beijing refers to as the three new export products: export of new energy vehicles, lithium batteries, and PV cells. In 2023, export of these products grew by 30%, reaching around $137 billion US dollars. So China now accounts for 70% of global EV sales, which has helped China to become the largest auto exporter. And around 80% of global solar manufacturing capacity is in China, and they probably have an even larger share of global PV exports. We see some interesting trends in 2024. China is exporting more EVs, and the unit value has also risen. China is also exporting more PVs, but units as well as the total value have fallen. And China is not really exporting more lithium batteries, which probably tells us that EV production elsewhere is not going very much up, but units and total value has risen for these batteries. Now, look at this new map from IEA. It shows China's dominance in a broader set of technologies. Well, I'll let you make the judgment on this map. But when they posted this, they also added that green tech trade is projected to triple to $575 US dollars by 2035. So to put that into perspective, that would be over 50% larger than today's global natural gas trade. So China, if China maintains its dominance, this trade would surpass combined gas exports of US, Russia, Qatar, Norway, Australia, and double that. And this transformation obviously isn't decades away, according to IEA. It's within the next 10 years. Now, that is kind of the stage. Let's turn to the obvious question. Why has Beijing gone all in on green tech? And nobody else has done it, but that's probably a side question. To understand this, it's helpful to look back at the United States in the 1950s. At that time, the US produced roughly half of the world's manufactured goods. Take a look at this chart. Even with all its advancement, China hasn't yet reached the share of global manufacturing that the US held during that period. The US leveraged this production capacity to become the dominant economic powerhouse, expand its global influence, and shape the international order. A key driver was its export of military equipment, stemming from its military-industrial complex after the war, which made up half of its exports. And of course, that came with strings attached to partner nations. So Chinese policymakers deeply respect the power of this US-led system. This system gives the US major advantages, such as attracting global capital and top talent for innovation. And let's not forget that the US military remains the most powerful force by a mile, also way ahead of China. So, and particularly, Beijing understands the power of the US dollar. They see how the American growing trade deficit is reinvested back into its financial system, reinforcing its dominance. So unlike the post-war US, which built institutions to consolidate its role after a world war, China is rising within established global structures. It has to. Its path is therefore much more complex, and often China views the current US-led system as unfair and constraining its rise. But as we will see, Beijing is strategically carving out its own distinct path. Here it's important that we understand how China views the role of manufacturing. Remember, the US had 50% in the 1950s. And a key point I would like you to take away is that Beijing is convinced that having production capacity matters. It is of existential importance. There is no doubt about this path forward if you read the Chinese policy text. With 35% of global manufacturing today, it's already a central force in the global economy. But UNIDO, I think this is from last week, now forecast the PRC will reach 45% already by 2030. That's 5 years from now. 45%, almost half of global production in China. That is jaw-dropping. The PRC's path is diverging from conventional development of advanced economies, which have largely deindustrialized as their economies matured. One of its priorities is to avoid the pitfalls of excessive speculation, the kind of financial activity that inflates bubbles but contributes little to the real economy. And yes, Beijing is trying to learn how to limit excessive speculation on the stock market while leveraging its function to allocate capital. And the real estate bubble is a topic of its own. But the point here is that the best way to do that is to see immediate results in real-world application through production. So by anchoring investment in production, Beijing hopes to minimize risk while maximizing strategic outcomes. A secondary challenge is then fostering innovation to raise productivity. As Beijing sees it, the primary challenge in overcoming tech chokeholds is not simply weak foundational research, but rather dealing with disconnects between innovation and industry. So I think this can be seen as a kind of a paradigm shift in how we can think about industrial power in 2024 and beyond. China seeks to redefine it as not just capacity to produce, but capacity to innovate, control value chains, and shield China from external vulnerabilities. And this way is, of course, very much worth paying attention to, especially in a world where the connection between innovation happening in advanced economies and the production now happening in China can be cut off as global tension rises. It probably should be noted that, of course, China has its own weaknesses, most critically in food production. Back to this point that they have a very small share of global arable land. I can go on about that maybe, but that's a side point. For anyone who follows Beijing's policy moves, it is clear that it has identified two interrelated tech sectors that it believes will reshape the global economy. The first is new energy tech, and the other is IT or digital tech. And I probably also could mention there are a few others like biotech, but for this story, that's not relevant. So new energy tech and digital tech are both central to China's vision for economic transformation. So here, let's start with new energy tech. So take a look at this chart comparing fossil fuels and renewables system. Why is new energy tech such a game changer, according to Beijing? Well, the first significance of new energy tech lies in its ability to disrupt the status quo. Well, that's important for Beijing since it has struggled with its lack of control over fossil fuel production and supply chains. Industry is dominated by a handful of other countries. So currently, the PRC is dependent on other countries for energy resupply. It imports something like between 70 and 80% of its oil. And Beijing wants to eliminate these dependencies. New energy tech offers a way out. It offers a path to energy self-sufficiency, which is, of course, then a crucial step for national security. Now, I should probably notice that China is dominant in these technologies. And you could say that dependency is now moving from fossil fuel to basically China providing these technologies. But once built, renewable systems do not require this constant fuel resupply. And that limits China's ability to exert the same level of dependency of other countries as seen with fossil fuels. The second importance is that it flips the economics of energy on its head. Fossil fuel gets more expensive as you scale, while renewables gets cheaper. Of course, to build this new system is very costly compared to a system that many of us or many countries already have. But the point is that the investment in a new energy system is economically better in the longer run. And energy isn't any sector, it's the lifeblood of the economy. So abundant, cheap, and locally produced energy, however far in the future, is a game changer. And let's not forget that this would be a very positive on the environment. And even Beijing likes some good PR. That said, China isn't there yet. Its economy still relies heavily on fossil fuels, especially coal. And transitioning isn't just about throwing up renewables and electrifying. It's about overhauling the entire system, building transmission networks, storage capacity, etc. It's a qualitative story. So Beijing has set two goals. The first goal is to peak carbon emissions by 2030. This can be seen as a quantitative challenge focused on scaling renewables up to replace the growth of fossil fuels. But the other goal, carbon neutrality by 2060, is better seen as a qualitative transformation. To reach that goal, you need to create a complete new ecosystem while also, of course, dismantling the old one. Now, this balancing act of quantity and quality is the heart of how China thinks about this green tech strategy. Let's move to digital tech, which is the other sector I mentioned China believe is undergoing a seismic transformation. This transformation is driven by what insiders in China often call, and others often call, the sixth generation of innovation, the 6G. So in earlier, and this is a little bit complicated, I guess, but I'll try. So in earlier generations, science and technology research remained largely separate from innovation, which applied discoveries to industries. The sixth generation, powered by big data, IoT, and AI, potentially, or it does, disrupt this separation. Research and innovation can now operate in a seamless process where discoveries are instantly adapted and applied across industries. And of course, this will do and already does wonders to productivity. But again, let's remember why China believes manufacturing capacity is so important. What's unique here is integration. Real-time data informs research, which is immediately applied to production. But without manufacturing or any valuable output, it could be others than manufacturing, research and innovation is then just theory and fun. So development of software and algorithms and data putting or digitization are only valuable if it can be applied to the real economy. And the green tech sector offers maybe the best field for such application, at least in the short term. It applies to the renewable energy or the power system, but it applies even more so to the auto sector, which already is a lucrative market. So a car is valuable, but an intelligent, connected electric vehicle, that's kind of a different game. So these two technologies, or these two groups of technologies, Beijing think are potentially or are game-changing. What makes these technologies truly revolutionary isn't just their potential to transform industries, but their ability to redistribute power. So they keep reminding themselves as every industrial revolution such as this has reshaped global power hierarchies, including within societies. So Beijing sees this moment as no different. So if Beijing believes these are really big game changers, short-term efficiency is not really their top concern. Rather, it wants to make basically everything it can to set itself up to lead in the future. The key question for China isn't about costs, it's about managing the transition. And this perspective shapes how Beijing addresses challenges. Problems aren't seen as market failure or failure of society. They are framed as governance issues. Problems to be solved through state action and guidance. This is, of course, in great contrast to orthodox perspectives, where energy transitions are often viewed as an unavoidable economic burden, huge cost or risk investment that markets struggle to accommodate. Beijing, by contrast, sees political, economic, and global opportunities in these shifts. A key question now is, will all I just said mean that Beijing will continue to invest in its transition as aggressively as in recent years? And are they capable of keeping up the pace? Well, the answer is yes. At least Beijing thinks so. But it will not be in the same way as before. It's well recognized that China's investment-led model has reached an inflection point. So GDP growth is slowing, but more importantly, the population aged 25 to 59, so the working population, is shrinking. The UN projected will shrink from 750 million today to just 430 by 2060. That's a 40% drop, 40%. So this is a major issue. This demographic shift puts immense pressure on labor supply and productivity growth in the future. But many now suggest that China should move to a consumption-driven economy like advanced nations. But Beijing clearly doesn't consider this as very straightforward. Low household income, weak social safety nets, and an aging population mean supporting consumption alone won't solve these structural imbalances that they see in the economy. So simply giving people more money risk increasing savings, not spending. Instead, China's leaders continue to emphasize supply-side innovation. One of the most influential economists in China has put it this way. He said, China's future lies in foundational innovation, industrial upgrading, and modern financing, not demand-driven growth. And Beijing's supply-side approach diverges from Keynesian models. Xi Jinping, the leader of China, explained last year that the goal is to align demand with investment opportunities. So the government will provide signals to the market as to where it sees demand. But the overall strategy is to ensure that high quality supply drives future demand. It is a very clear way of saying we will not give money away just to raise consumption today. It also means that they see the current problems largely stemming from governance failures, not from market failures, just to repeat my point again. This chart gives us a hint as to why the state is eager to actively guide the process. The incremental output capital ratio, the ICOR, the economic is showing the economic output per unit of investment, and this has now plummeted to 0.1. This means every yuan invested yields diminishing returns. Profits are kind of simply not there, and which also tells you why a lot of people within China is frustrated, but also international investors trying to make it in the Chinese market is frustrated. Without state intervention, investment would simply collapse, or very soon there are very little profits. But the idea is that the state can provide signals to the market where profits should be made, and then investment will continue. So they still want the market to allocate the resources, but within the constraints and guidance set by the state. And often these market players are themselves state or partly state actors, increasingly so. It's different from earlier version of state-owned enterprises that largely had monopolies. Now they have, or they want at least, competition in areas where there should be competition, but they keep control and guidance through capital control or capital guidance. The point isn't just reactive intervention then. It's a deliberate strategy for sustainable, or what they consider sustainable, innovation-led growth. This is kind of a famous chart by now. It shows how this guidance plays out in reality. So the growth in manufacturing has probably gone up a bit since 2022. It's gone up and then flattened out a bit, but it basically tells you the story. And recent policies underscore the shift also. For example, People's Bank of China reported early this year of negative social financing for the first time since 2005. So really limiting bank loans. And I think this really sent the message that they want the credit into prioritized sectors. So even the much stimulus package that was announced a few weeks ago, I think align with this push for what they call high quality development. So the stimulus didn't alter this trajectory at all. And export policies reflect similar thinking. Just announced on Friday, from December 1st, export tax rebates on key green tech products will drop from 13% to 9%. So that aims to curb loss-making price wars at home to go global, selling with losses abroad. I will come back to this story a bit. I also wanted to show this chart, which is showing that the Communist Party is very clearly active in trying to guide the capital in China. And so the argument that excessive state involvement in the economy is a recipe for disaster has clearly not been bought by the Communist Party. Instead, you can see that they're building a party apparatus that will bolster their involvement in this transition. The chart shows 4 new institutions that were announced last year to give the party a more active role through guidance, supervision, but also discipline. They hope that, they've kind of tried that before, you could say, but the party groups in the enterprise have really expanded over the last few years, and there are now more than 1.6 million party units within enterprises in China. Let me say a few words about the current price wars in the green tech sectors that I alluded to. When Beijing developed its green industry strategy from the early 2000s, it used targeted subsidies and incentive to attract foreign technologies to kickstart the first wave of supply-side growth. the plan was always to phase out these subsidies and incentives with the 5-year plan starting in 2021. So by then, they had been very successful, and they had the capacity. They had largely standardized these technologies, and all kinds of companies were equipped to ramp up production independently. And this also happened, remember, at the time when the government decided to pop the real estate bubble. So the economy has been under a lot of pressure, and growth have been in the manufacturing and the green tech sectors. But because the government has kind of channeled this money into this sector, there's been a lot of competition for contracts. So the chart here is showing that the SOEs have essentially met their targets for 2025. So the targets in the 5-year plan. And we also know that China has already met its targets for renewables by the 2030 targets. So what we now would expect is that there will be a slowdown and more focus on quality over quantity. And that's essentially what I think we're seeing in China now. So at this juncture, we see that this build-up capacity are now facing a very fierce price war, trying to get market shares. And this has led to what China refers to as involution. So the issue is that many companies can survive by as long as the liquidity is provided, because they believe that there will be more market opportunities in the future. They know that this is up and coming. So they are bidding lower to compete with competitors, which is, of course, good for consumers. It's good for building capacity, but it's not necessarily good for quality development. It's not good for innovation. It's not good for there's all kinds of pressure on the supply chain. So there'll come a lot of safety risk with this. Well, here is a graph showing how this plays out in the wind power sector from the China Wind Energy Association. So it shows the dramatic drop since basically the subsidies, the feed-in tariffs were removed in 2021. And the association did some calculations early this year and said that the break-even cost for onshore, so the green one, is basically 1400s. And they went through all the bids, and they said that 32% of the bids was lower than what they consider break-even cost, 32%. So this has really put some alarm bells out. Not only is this bad for profit, but it's obviously not good for what I just said, innovation and so on. And the picture is mirrored in PV and many other green techs. Now, in the EV market, so we see similar phenomena, but the average prices have gone up. But the issue there is that even the cheaper cars now have kind of the luxury gadgets. So the companies are not really making money, and they are like fighting by putting more stuff into the car. Good again for the consumers, but it's not really how you build a very profitable and successful sector, and doesn't necessarily drive innovation that much, because they're basically moving the gadget from the luxury cars down to cheaper cars. So the adjustment in the governance of capital allocation is seen as crucial for moving away from this kind of involution, price-driven competition, which drains resources and stifles innovation. Just as China are stuck in a cycle of aggressive production and price competition without substantial gains, financial involution also traps capital in unproductive loops based on speculation that there will be some demand here in the future. for lower quality products that are not actually able to compete with the best players in the game. But so what is the Chinese government doing? Well, again, they see it as a governance failure. And the current emphasis is on solving the agency competition, and especially among local governments who protect local champions. And so this competition among local governments have been really crucial for China's rise. It has really allocated resources efficiently. But what we now see is a fundamental change in how Beijing wants that competition to happen. And also this relationship between the central local government is changing fundamentally. So the Politburo had a session about this this summer and set up some guardrails. So, I mean, this is a very significant shift and a lot of complications and details, but in essence, local governments are losing their ability to protect their own interests through special access to financing. But they still need to meet these very aggressive targets that the center sets. So how do they do that? Well, they need to work with these state guidance funds or this capital that the government allocates, and they need to attract them by not offering cheap land or lower taxes or even access to credit to team up with, but to develop specialized ecosystems that prosper through innovation. So we see that Beijing is taking some strategic measures to curb the kind of unfair competition behavior domestically, and have taken measures to avoid the current domestic race to the bottom, lose-lose situation to spill over to international markets. But it does not mean that they are pulling much back in terms of their global dominance ambitions. By approaching 45% manufacturing production by 2030, I think we are really talking about nothing less than a really big global game changer. And naturally, this level of dominance won't be met without resistance. So established global powers and industries that benefit from the status quo will push back, and China knows this well. It might not really be a zero-sum game. The interconnected, like the global economy is, interconnected, and it will take time to kind of play out. There are plenty of rooms for cooperation and finding common ground. I think at the end of the day, some new rules here needs to be negotiated. But at the end of the day, I think that the real growth story for China lies at home and in the developing world. So the developing world have immense potential and a strong drive to develop, but they also bring obviously their own agency, their own ideas, ambitions to the table. And as we talked about before, is that these new energy technologies do not create the same dependencies as the old. They decentralize power, once the infrastructure is established. So I think that's a place to start cooperation. But then as we move into this digital space where China also have ambitions, that requires much more thinking, because I think we clearly see dependencies being built there. Power for the digital space may be concentrated in the hands of very few small, big, dominant players or countries. I think that's something that we can obviously talk more about and think more about. I don't think we have really seen what China is planning to put on the table here. They are still very much focused on their domestic markets. And, as I showed earlier, is that their ODI last year was only 10% of global investment. So it's nothing where the US was when they kind of built their power in the 1950s, which I think was 85% of global ODI. So I was planning to, I think I'll skip this one and go straight to the SWOT analysis, which I promised. So this is how I think China sees its strengths and weaknesses and opportunities and threats. I will not read it all out, but I'll give you some kind of conclusion on this story. So China is clearly on a trajectory towards a more confident political economy with more confidence in their own trajectory. Stronger control on economic levers is kind of the result of that. And Beijing is taking a tighter hold on capital allocation and industrial policies to align economic activity with its strategic priorities. Well, with China's size and role in the global economy, this state-led influence will obviously extend to global markets. And given the likely resistance in developed markets, emerging markets will likely be their long-term focus. What is very clear to us is that Beijing's visible hand will ever more impact investors. Those who understand its moves will hold a decisive advantage in the upcoming energy transition. So the question is, do investors want to lean in on this or hedge away from it? We can discuss that. But I think I'll leave it with that, Charles, and we can take some questions maybe.
Okay, thank you very much. We've got a couple of questions. Let me just come out of that. All right, we have a question here on from Jeff Askell. China seems to be betting on the rest of the world buying their new green tech. What if they don't? What about tariffs, geopolitics, etc.? Can China do it alone or with a few friends around the world? Or what, on the flip side, can Western countries afford to cut ties with China's cheaper green tech?
Right. Should I answer one on one? Okay. So, yeah, I mean, China obviously believe that the world is going to need this. There is markets in developed countries, and as we saw on that IA chart, they're selling a lot, and especially to Europe. I think the resistance there will grow bigger, and they want to protect their own market, create their own champions, etc. Well, that's obviously what is interesting there is that it's. I think China is very well aware that that creates some kind of interesting dynamic where, if EU slash on tariffs, well, their products then will be more expensive, which then again makes China's products even more attractive. So it's a tough one. I mean, it's the question then comes: do you want to transition or not? And the way that China thinks about it, just to repeat a few of my points, is that, well, these new energy green technologies are better than the old ones. They create more national security, but they also are better economically. So that's their kind of selling argument. But the question, of course, what I ended off with is, can they then go to developing countries who want to kind of develop, industrialize, etc.? The question there is, how do you pay for that? In a kind of a system that is dominated by these U.S. institutions and the dollar. And I think we're still waiting to see what China is going to do there. I would say that currently China is still very much focused domestically. Most of their activities happens in China. Although there are some kind of overcapacity, they are not really concerned about that. And they are managing these tensions with especially the EU and the US, also other countries. But I think that they are still kind of preparing for a bigger global push, you could say.
Right. Okay. I mean, China is following up on that and said, if 45% of manufacturing is likely by 2030, there will be resistance from the developed world. Therefore, if you're going to be looking towards the global south, but will the global south be able to afford the imports? And obviously, Belt and Road debt is already very, very high for many.
Yeah, I mean, that's what I'm saying, is that obviously this is not straightforward. China needs to come up with a new game plan. I don't think they can rely on this American system. So there are obviously an alternative to internationalize their own currency. That would solve a lot of this tension, I think, because then, I think the risk would be lower for host countries. But at the end of the day, it's can also be seen as a kind of an investment for these developing countries. You might create, which is basically what China is doing, is to invest in the future. And then once you have, I mean, China is not, you could say that, they're not making profits on this, right? They're trying to keep it kind of efficient in terms of how much push they give, how much stress they put on the system. And it's kind of what you saw is kind of, it's on the brink of not incentivizing market players to act. But yeah, so I mean, why can't other countries think like that? That's the question, I think. It's not only about, China has advantage with scale. They have now advantage that they've actually built this system up over the last 20, 30 years. But, I don't see any reason why they can't cooperate. So the question is, how will they cooperate? What rules will they create? And who should pay? Who should have the rewards? And I think this is what I'm interested in, at least, is that the way that China talks about this is that these technologies are very different than traditional technologies. They have this fancy term for it, new quality productive forces. So the way to think about who should own, the role of the state, the role of the market is different in this kind of ecosystem than the traditional development theory will tell you.
Okay. James has asked a question about China's nuclear energy strategy with rapid reactor build-ups and expanding overseas. How does that fit in with green technology?
Yeah, well, thank you for that question. I mean, nuclear is obviously a very interesting one because it has a lot of the I mean, it nuclear. So now China has control also over most of the nuclear technologies. I mean, they are ramping up very quickly. Just approved 11 new reactors. I don't remember the number, but at least more than half of the global, if not all of them almost, of new nuclear reactors are being built in China. The issue for China there is the resupply of especially uranium, but also other special chemicals, etc., that you need for nuclear that they don't control. So there you have this dependency issue again, which, it kind of depends what fuel, what technology you're using, but there are some dependencies issues there that is you don't have in renewables.
Yeah.
So I'm not sure how this will play out, but the interesting thing is, of course, that China they know how to build them. They know they have kind of the latest secure, small, modular nuclear power plants, and it's a big part of their strategy. The question is, can they make it global when they don't control critical input of it? So,
yeah. Okay, a question here from Elizabeth. Why does Beijing see so much potential for geopolitical power in new energy if it's a decentralizing power?
Yeah, well, first it's a matter of kind of breaking free of their own dependencies, I guess, would be my first reaction to that question. So yeah, I mean it's and then the second is obviously that that having these technologies now would create a lot of influence from China now as a first mover. So China can kind of create standards. They can initiate discussions of new global trading rules, etc., etc. So, but I don't think, I mean, at least they point out very often that these are not creating the same dependencies geopolitically as the traditional one. So you would expect eventually this would be some kind of more peaceful world. But it's again, it's China, is aiming for this kind of high level socialist state. We're a strong state, but I think most other countries doesn't necessarily agree with that kind of division of power. So,
yeah. Okay. There's a question here about a Chinese version of a Green Marshall Plan. How do you assess its feasibility?
Okay, yeah, I haven't read that article. But so again, I think that surely there is kind of an opportunity for China to do something similar, but they're not at, there are some similarities to the US in the 1950s, but there are also big differences, especially that they are rising within a kind of a system that is occupied by the US militarily, but also financially. So there are concerns about, obviously China is thinking about it, and they thought a lot about it after the global financial crisis. But I think now they're still very much focused on themselves, improving their own vulnerabilities, improving their own innovation system, trying to attract capital to China instead of taking it, globally. But I think this might change quickly, in let's say 10 years from now. So it's something to pay attention to, but I don't think that there's a clear kind of recipe where they can just copy America, because these technologies are quite different than what the Americans can offer with military equipment protection from the Soviets or a certain lifestyle.
Okay. A number of other questions here. There's been a focus on human and labor rights in China's supply chains. Can you talk a little bit about that and how much it might impact the growing green tech industries?
Yeah. Well, how should I frame this? Well, what I would say is, I mean, from China's point of view, they are very eager to create the standards of whether it's green or responsible or, and they're competing, with others in that, in particular the EU. So it's quite interesting to see this kind of dynamic where the EU is kind of putting up standards that they hope will put their producers at an advantage. And China's reaction is usually to feel like they can meet those standards and they want to take it up a notch. There are, of course, and I probably didn't put this into the SWOT. I could have done this because the transparency in China is an issue that I guess competitors can and are using against them, whether or not they are, critical issues for this. But the counter from China would then be, well, do you want it or not? And this is, I guess, China's reaction to all human rights kind of issues is to say, there are some issues, but in the future we will solve them.
Okay. There's a question here from Nigel about the energy mix in 2050. He says nuclear can't be turned on and off. So what's China going to do as far as nuclear? Is China betting on storage or maintaining fossil fuel capacity?
Yeah, interesting question. I mean, so this is they obviously have a very different way of thinking about this compared to other power markets around the world. So nuclear is not supposed to ramp up and down like they are in the EU. So in the EU, you have this technology neutral principle. So every day when renewables are coming into the system, nuclear basically needs to get off the grid. That's not the case in China. In nuclear is baseload in China, very clearly, and then nuclear is renewables is then competing with fossil fuels. So they have a very specific role. I think this is what I talk about. They want to build this quality system. So instead of saying give the market kind of room to figure out how is the best configuration, I think in China is more about that the state is very involved in saying, well, this technology has this role in the system, this technology has that role. And yeah, the other question there was on storage. So obviously storage has a specific role and will be priced accordingly, So, coal is now being paid for being backup capacity. So the system pays coal power plants now to stand by, which, provides space for other sources to be on the grid. So that's the way they think about it. Yeah.
Okay, a question here on critical resource minerals and whether China's success is going to be challenged by the US and also by the EU and their initiatives.
So critical resources. Yeah, no, I mean, my first reaction is that, that to me, it sounds is a long-term issue. You obviously, the natural reaction for most countries in the world, it would be to wake up. I mean, China is controlling a lot of these supply chains. You obviously can't change that overnight. So, but you should start, obviously, because at least if you agree with China that, manufacturing at home is very important. So the answer there is now, is it supposed to be successful now? I don't think so. I mean, it's it doesn't seem very successful to me.
Okay, I think we'll leave it with one last question, and perhaps it gives you an opportunity to round up as well. Why has China's development of green energy technology been more successful than other countries?
Yeah, okay. So that was my presentation, I think. The reason is because China believes it's a game changer. They don't care about the market efficiency of this. They don't care about the profits now. They care about transitioning. And that's why the government is stepping in to guide this transition. Whereas in other countries, you don't see that the government is taking that responsibility. They leave it to the market. They leave it to universities to figure it out. And it often, I would say, gets, slowed down by vested interests who obviously don't want to change too much.
Okay, I think that's a very good point to leave it. So thank you very much, Erlend. It was an excellent presentation.